Today sees the launch of our September bi-monthly report, focusing on trends and transactions in the Northern Ireland commercial property market as the market gears up for the traditional autumn selling season. Following the normal summer lull and a pause for breath to consider the potential implications of the surprise Brexit referendum result in late June, the commercial property market in Northern Ireland is now gearing up for what promises to be a busy autumn season. At the time of our last report on the Northern Ireland property market, the property industry was understandably coming to terms with the surprise result of the Brexit referendum result on June 23rd. While the result had created considerable uncertainty for both occupiers and investors in the Northern Ireland market, and there are still many questions remaining, the initial furore has now largely dissipated, and we have seen continued activity in all sectors throughout the summer months. The strength of activity in occupational market remains particularly encouraging for investors. There has been considerable focus on preparing assets for sale over recent weeks, with at least £100 million worth of investment assets due to come to the market this autumn. To date, prime yields appear not to have been adversely affected by Brexit concerns. As the traditional autumn selling season progresses, however, we'll continue to monitor this as new transactional evidence emerges. Buying activity will predominantly emanate from private equity and debt buyers as opposed to institutions for the foreseeable future. With investors now more cautious and increasingly focused on prime assets, there is potential for some softening of secondary yields later in the year, although this is unlikely to be dramatic considering the arbitrage that exists between yields in Northern Ireland compared to mainland UK. Interestingly, there's been an increase in the appetite of financial institutions to lend towards real estate of late, which will support increased private debt purchasing in the short to medium term. Having seen healthy take-up of more than 230,000 square foot being achieved in the office market in Belfast in the first half of 2016, there has been continued activity in this sector in recent weeks, with a number of transactions announced, such as the letting of 17,650 square feet to Tourism Northern Ireland at Lenham Chambers, and the letting of 6,000 square feet of additional space to Regis at Arnott House in the city centre. The announcement from London financial services company Tullett Prebon that they intend to develop a new technology centre and create up to 300 new jobs in Belfast is very welcome and will provide a welcome boost for office take-up in the capital in due course. Our research suggests that there's demand for more than 750,000 square foot of new office accommodation in Belfast at present, which is encouraging. Although very little speculative development is underway, there's good visibility on potential office supply, with many schemes having the benefit of planning. A number of office schemes have obtained planning permission in recent weeks, including a recent decision to permit McAleer and Rush to develop 215,000 square foot of Grade A office accommodation at Bedford Square in Belfast. Elsewhere, news that planning has been lodged for the development of a 740,000 square foot high-quality campus at Carnmean in Newry has been broadly welcomed. Prime office rents in Belfast are currently £17.50 per square foot and remain firmly on target to reach our £18 per square foot forecast by year end. There has been continued activity in the retail sector during July and August, with a notable increase in shoppers from the Republic, fuelled by the depreciation of sterling, which has improved Northern Ireland's competitive position and proved particularly beneficial to border towns in recent months. Against this backdrop, we've seen several new store openings and retailer announcements during the summer, including the Spanish fashion chain Stradivarius, who recently opened a new store on Donegal Place in Belfast, the Entertainer toy store, who opened a new store in Northern Ireland, their first in the province, at Castlecourt, Pandora, who opened a new store at Cornmarket, The Range have announced plans to open a new superstore at Braidwater Retail Park in Ballymena. Meanwhile, the value retailer Home Bargains has recently opened a new store at Hollywood Exchange, while Superdry has announced plans to open a store at the Keys shopping centre in Newry. There has been some further upward movement in prime retail rents in Belfast recently, with prime high street Zone A rents in the city now in the order of £125 per square foot. The hotel and tourism sector has continued to perform well of late and has benefited from sterling movements in recent months, with strong occupancy and improving RevPAR being reported across the region. There are currently 5 hotel projects on site in Belfast. Groundworks have now started on the new City Keys Hotel in Belfast, which will be operated by Marriott International, while the owners of the Merchant Hotel in Belfast are due to open the new 43-bed Bullet Hotel on Victoria Street in the city next month. There have been a number of new planning applications for new hotels lodged recently also. All in all, despite the uncertainty which has prevailed since the Brexit referendum result in late June, activity has continued in the property market in the province regardless, and a busy autumn selling season is now in prospect.